As we head into 2021, the Canadian housing bubble shows no sign of stopping. Although a growing group of experts are calling for a Canadian housing market crash in 2021, let's see what the numbers tell us. What's up, everybody? Welcome back to the channel. I'm your host, Danish, and I make personal finance, investing, and real estate topics easy to understand and keep up with. I want to take a quick moment to wish you and yours a very happy new year. Here's hoping 2021 brings you luck, wealth, and happiness. I also want to thank you personally for supporting the channel throughout 2020 as I started back in the summer. My goal is to provide you with value-added content so you can make better financial decisions without having to pay anyone. I spend on average about 30 to 40 hours per week bringing this content to you, and I have a lot of fun doing so. Financial knowledge should be shared and should be accessible to everyone, regardless of your background. This housing market update is going to be a little bit different than my last few updates, as I want to incorporate as much feedback as I can from the comments, as the whole point of these housing video updates is to provide value to you. I dig through, research, and organize the data so you don't have to. For this update, I'm going to go across the country presenting stats and regional updates. Lots to talk about, so let's jump right in. Looking into some national stats before jumping into the regions, the MLS Home Price Index jumped 1.2% month over month in November and 11.58% on a year-over-year basis. The national average sale price is up 13.8% from the same month last year, coming in at just over $603,000. What's interesting to note, as this was a slight decrease when compared to October of 2020, when the national average price was around $607,000. Is this a sign of things to come? When you exclude Greater Vancouver and the Greater Toronto area, this cuts $122,000 off the national average price to around $481,000. According to a senior economist from the CREA, the story of 2020 when looking at the housing market is that it's gone from weakness because of COVID-19 to strength despite COVID-19. And I tend to agree. Residential sales activity is up 32% year over year, showing the housing market is still running well above historical norms. For the fifth straight month, year-over-year sales activity was up in almost all Canadian housing markets compared to the same period in 2019. As we move into 2021, the market conditions are the tightest that they have ever been, and sales activity continue to set new records. As more people are vaccinated, immigration resumes, the work-from-home trend continues, not to mention mortgage rates are expected to remain at historically low rates. We're going to see people continue to move around to the suburbs where they can still afford housing that fits within their budgets. First region up, the Yukon territories. This region is still below the national average selling price, with the Yukon territories seeing a 7.2% year-over-year increase as of November. This compares to 13.8% increase nationally. The average price is around $424,000, well below the national average selling price of $603,000. In 2020, the estimated population of Yukon was around 42,000 people. And the Canadians who live in the Yukon are also prone to affordability challenges facing the housing market. High costs of land and labor translate into higher costs for housing, and the lack of available land for new development only intensifies the problem. Due to the geographical location, climate, and population, there is an overall lack of housing options. There are many gaps in housing supply in the Yukon, with a desperate need to create more affordable housing options. Next up, Northwest Territories. Similar to the Yukon, the Northwest Territories housing market is also below the national average, coming in at just under $448,000, with a 5.3% increase year over year compared to November of 2019. The population of the Northwest Territories is around 45,000, according to a 2019 estimate. And similar to the Yukon, also faces the same challenges when it comes to the housing market. The Northwest Territories Housing Corporation has established a 3-year pilot project aimed at providing a one-time flexible support option to create affordable housing in the region. Back in 2018, new home construction in the Northwest Territories was the lowest since 2009, with only 53 total new housing units started. Quick stop to Nunavut. Housing for residents in Nunavut is different from the rest of Canada in terms that it's primarily non-market based. Very few who live in the region directly interact with the home ownership market or even the private rental market. The vast majority of the population lives in non-market housing, which includes social housing, subsidized housing for government employees, public housing provided by the Nunavut Housing Corporation, and housing provided to employees by private firms. As I mentioned before, the housing market in Nunavut is non-market based, and government subsidies have heavy influences on the housing outcomes. This is why there's such few statistics and trends related to the housing market in Nunavut. First province up, British Columbia. The average home price in the province is up 9% year over year and sitting at just over $814,000 as of November 2020. The price itself is higher than the national average, but the percentage year over year increase is below the average. Digging into the cities, the prices you'll see are the average prices reported in November 2020. For Chilliwack District, the average price in November 2020 was just over $564,000, which is a 10% year-over-year increase. Greater Vancouver, the average price is now over $1 million, coming in at $1,044,000, which is a 5.8% year-over-year increase. The average price in Kamloops is now over $483,000. That's a 10.5% year-over-year increase. Vancouver Island, the average price in November was close to $520,000, which is a 5.3% year-over-year increase. The average price in Victoria as of November was over $730,000, which is a 4.9% year-over-year increase. Vancouver's mortgage delinquency rate is also climbing and sits at a multi-year high for the region. The rate, it reached 16 basis points in Q3 of 2020, which is 6.7% higher than Q2 of 2020. What's more interesting is that this rate is 23% higher than last year. In BC, the average rent was $2,032 per month, just shy of Ontario. This represents a 6% increase year over year at the provincial level. The average one-bedroom rent in Vancouver is $1,865, which is a decrease of 5% year over year. In Burnaby, the average one-bedroom rent is $1,661 per month, which represents a 9.3% increase year over year. You can see the differences between the two cities. One is on the rise and one is on the upward trend. For 2021, Vancouver is expected to be a seller's market. An increase in supply is anticipated for the downtown core, and low interest rates will continue to have an impact on the housing activity. Buyers are anticipated to be seeking larger properties in the suburbs rather than buying in the downtown core when it comes to 2021. Move-up buyers are currently the ones driving demand in the Vancouver real estate market, which is expected to continue going into 2021. This will not come as a surprise, but single detached homes are the most popular property types for move-up buyers in the Vancouver region. Moving on to Alberta, the average home price is up 7.1% year over year as of November 2020, with the average price coming in just over $405,000. Both metrics are below that of the national average. Let's dig into the cities. The average price in Calgary is just under $419,000 as of November 2020. That's a 1.4% year-over-year increase. Edmonton, the average price is under $323,000 as of November, which is a 1.9% year-over-year increase. Here's an interesting one. Fort Mac, the average price as of November 2020 is over $407,000, which is a 16.8% year-over-year increase. Grande Prairie, on the other hand, is just under $317,000 as of November 2020, which is a decrease of 3.5%. What really stands out for me here is the explosion in the Fort Mac's housing market. It's a phenomenal 17% year-over-year increase, whereas Calgary, Edmonton are both less than 2%. And compare that to Grande Prairie, which is declining. The average monthly rent in Alberta is now $1,232 per month, which is a decrease when compared to 2019, where the average rent was $1,275. In Calgary, the average one-bedroom rent per month is $1,173, which is down 0.4% compared to 2019. In Edmonton, the average one-bedroom rent is $1,022, which is up 0.8% year over year. Just like we saw in BC, the larger, more urban markets are seeing a decrease in rent, where smaller regions are seeing an increase in rent. We'll see if this trend continues as we move across the country. There's also an oversupply of new single-family homes in both Calgary and Edmonton, with demand being segmented. The market in those regions is currently favoring duplexes and row-style townhomes. First-time home buyers in Calgary and Edmonton are typically single home buyers. These buyers are not looking at one property type specifically and are buying across all property types. Due to the ongoing economic factors related to the oil and gas sector, as well as COVID-19, expect this to continue to influence market activity going into 2021. Move-up buyers in the Calgary housing market tend to be families who have been in their current homes for a number of years and whose jobs have not been impacted by COVID-19 or the economy, so they maintain that financial flexibility, which will allow them to upsize their homes as they see fit. Next up, Saskatchewan. The average home price is up 3.9% year over year in the Prairie Province, with the average home price itself coming in at just over $280,000. Both of these metrics are well below that of the national average. Looking into the cities, the average home price in Regina is just under $279,000 as of November 2020, which is a 7.5% year-over-year increase. The average price in Saskatoon is now above $300,000, which represents a 5.6% year-over-year increase. The average price in Moose Jaw is just under $223,000, which is a monster 20.2% year-over-year increase. Similar to the trends of the other provinces, we can see that there are buyers moving out of Regina, out of Saskatoon, and into areas like Moose Jaw. The average monthly rent in the province is now $1,013 per month, which is down when compared to 2019, when it was $1,116 per month. The average one-bedroom rent in Regina is $956 per month, which is down 3% compared to 2019. The average one-bedroom in Saskatoon is $902 per month, which is unchanged from 2019. Both Regina and Saskatoon are considered to be balanced markets heading into 2021. First-time homebuyers in Regina typically tend to be young families or young couples that are looking for single detached homes. These properties typically range between $250,000 to $350,000. Meanwhile, in Saskatoon, first-time homebuyers typically tend to be young professionals who are looking for single detached homes. These properties will typically range between $275,000 to $330,000. First-time homebuyers in Regina and Saskatoon can continue to take advantage of interest rates that are expected to remain historically low for the next little while. Moving on to Manitoba. The average price is over $314,000, which represents a 7.9% increase year over year as of October 2020. Similar to the other prairie provinces, both metrics here are also well below that of the national average. Looking into Winnipeg, the average price as of November 2020 is over $286,000, which is a 7.1% increase year over year. Brandon, Manitoba, the average price is over $214,000, which is a 6.3% increase year over year. The average one-bedroom rent in Winnipeg is $1,149, which is up 2.2% compared to 2019. Going into 2021, Winnipeg is expected to continue as a seller's market, with bidding wars continuing to have an impact on first-time buyers as well as move-up buyers from entering the market. Move-up buyers in the Winnipeg housing market typically tend to be families, and many have decided to wait on entering the housing market if their current home continues to meet their needs. The result is a lack of urgency to move. The condo market in Winnipeg is the most popular for young couples and single home buyers, with the average price of a condo in Winnipeg being around $245,000. The current condo market in Winnipeg is currently better than it has been previously, but it's still slower than that of the detached market. Up next, Ontario. The average home price in the province is up over $744,000. That's a monster 17.8% year-over-year increase. Looking into the cities, the average price in Barrie is just under $600,000 as of November 2020, which is a 23.5% year-over-year increase. Cambridge is just under $610,000, which is an 18.7% year-over-year increase. Durham, the average price is under $755,000 as of November, which is a 24.6% year-over-year increase. Guelph, the average price is $658,000, with a 17.2% year-over-year increase. The Hamilton-Burlington area, the average price is $735,000, with a 17.3% year-over-year increase. Kingston, Ontario, the average price is $512,000, with an 18.6% year-over-year increase. Kitchener-Waterloo, the average price is $612,000, with a 19.3% year-over-year increase. Mississauga, Ontario, the average price is just under $1 million at $960,000, with a 13.3% year-over-year increase. The Niagara region, $511,000, with a 19% year-over-year increase. Oakville and Milton, the average price is $1.15 million. That's a 12.4% increase year-over-year. Ottawa, the average price is $540,000, with a 22.4% year-over-year increase. These are some crazy numbers that we're seeing year-over-year. Sault Ste. Marie, the average price is $221,000, with just under a 30% year-over-year increase. Thunder Bay, Ontario, average price is $253,000, with a 16.1% year-over-year increase. Greater Toronto, the average price is over $902,000, with a 10.6% year-over-year increase. Windsor, Essex, the average price is $412,000, with a 23.8% increase. The York region is just shy of $1.1 million and a 12.7% year-over-year increase. Wow. You can clearly see the stark contrast between some of the northern areas of the province compared to the southern areas. For example, Oakville Milton, almost $1.2 million. Sault Ste. Marie, $221,000. The average rental price in Ontario is $2,038 per month. This represents a decline of 12% annually. The average one bedroom in Toronto is $1,877 per month, which is down 19% on a year-over-year basis. The average one bedroom in Oshawa is $1,502 per month, which is a 13.1% increase year-over-year. The average one bedroom rent in Kitchener is $1,344, which is up 18.1% year-over-year. Clearly here we can see the impact on work from home culture has had, the reduction immigration has had. People are moving out of Toronto, the popular cities, and moving more into these suburban areas. There is a clear demographic shift happening, not just in the home ownership market, but also in the rental market as well. Some local markets in Ontario have actually experienced a decline in sales activity, but not for the reasons you may think. It's actually a result due to having limited inventory of housing available, rather than declining demand. Toronto's mortgage delinquency rate is climbing. It is at the highest level it has been in years. The rate is now 12 basis points as of Q3 2020, up 9% compared to Q2 of 2020. This is the highest delinquency rate Toronto has seen since 2016. Toronto's housing market in 2021 is expected to continue favoring sellers rather than buyers, which has been the trend for the past few years. It's no secret that low housing inventory across many of Ontario's housing markets in 2020 has led to rising prices. Some people are trapped in their houses, afraid to sell, because if they do, they would just have to buy another expensive home somewhere else. The other thing I want to point out is that Toronto's housing market is experiencing a shift in buyers' demand, prompted by economic factors such as the work from home culture, lifestyle and immigration changes due to COVID-19. Toronto's condo market is currently a buyer's market, whereas the rest of the market favors sellers. So that means there's a tiny glimmer of hope for first-time home buyers who are looking to enter Toronto's housing market. Given that working remotely has become such a popular option now, many buyers in Toronto are looking outside the city and looking to focus on affordability versus being close to their office in the core cities. This migration trend outside of core urban areas is not just limited to Toronto as we've seen. it's a trend across the entire nation. Home buyers are now seeking more square footage, more green space, and less density. Let's now check out Quebec. The average price in the province is now over $413,000, which is a 23.3% year-over-year increase as of November 2020. Let's look into the cities. The average price in Gatineau is over $345,000, which is a 21.3% year-over-year increase. Montreal, the price is over $423,000, which is a 17.5% year-over-year increase. Quebec City, just under $268,000, which is an 8.7% year-over-year increase. The average rent in Quebec is $1,643 per month, which is an increase over 2019, where it was $1,477 per month. The average rent for a one-bedroom in Montreal is now $1,454, which is a 9% year-over-year increase. The average one-bedroom in Quebec City is $959, which is a 6% year-over-year increase. The real estate market in Quebec continues to power through COVID-19, as sales in all properties continue to see an increase. November saw a 32% year-over-year increase in sales activity just for the Montreal region alone. In the upcoming months, however, sales activity is expected to decline. Again, not due to demand, but due to supply shortages. There is extreme low availability of homes in Montreal. In Quebec as well, buyers are typically looking for single-family homes, and this type of property is very scarce in the island of Montreal. Because of this, buyers are looking outside the island into the suburban areas. Again, the trend of this continues across the country. Quebec is no different than the trends we've been seeing across the country, movement outside of urban cores into more suburban areas. Everyone these days wants an extra room to use as a home office and a backyard to relax in. Heading into the final area of the country, the Atlantic region. The average home price in New Brunswick is now over $203,000, which is an 11.8% year-over-year increase. In Nova Scotia, the average price is over $306,000, which is a 12.8% increase year-over-year as of November. The average price in PEI is over $309,000, which is a 21.2% year-over-year increase. Newfoundland and Labrador, the average price is just under $282,000, which is a modest 5.4% increase year-over-year. What really stands out for me when looking at the Atlantic provinces is that New Brunswick has the lowest average price compared to the other three provinces by a wide margin. And the largest year-over-year increase can be found in PEI, which is much higher than the national average. Let's look into some of the cities in the Atlantic region. The Fredericton area, New Brunswick, the average price is just over $195,000, which is a 5.6% year-over-year increase. Moncton, New Brunswick, the average price is $227,000, which is a 17.6% increase. Halifax, Dartmouth is over $393,000, which is a 15.7% increase. Cape Breton, $187,000, which is a monster 33.8% increase. St. John's, Newfoundland, $269,000 with a 5.1% year-over-year increase. And you can compare these cities to PEI on its own, where the average price is $309,000. The average one-bedroom rent is also on the rise in Halifax, where the average price is $1,486. The housing market in the Atlantic region is on absolute fire, as buyers are descending from across the country to scoop up properties that are still considered to be relatively affordable, especially when you look at prices in Ontario and BC. For what you would buy the absolute cheapest, smallest home in Burlington, Ontario for $600,000 to $700,000, you could buy a mansion in the Atlantic region with an amazing view for the exact same price. COVID-19 and the resulting work from home life has increased the surge of buyers coming from outside the region, and the affordability and the lifestyle is drawing them to the Atlantic region. According to one local agent in Nova Scotia, 20% of sales are coming from outside the region. Think about it. You could potentially save $700,000 by moving here from like Oakville and Milton as an example. That's a lot of money, especially where you're coming from. You've already built up that home equity. You may not even need a mortgage coming into the Atlantic region. Before I end the video, I want you to take a quick look at the 5 most expensive areas in the country and the 5 most affordable areas in the country. The 5 most expensive areas in the country, starting off with Oakville-Milton in Ontario, coming in at $1.15 million. York Region, Ontario, just under $1.1 million. Greater Vancouver, just over $1 million. Mississauga, Ontario, just under $1 million. And Greater Toronto at $902,000. You can see that 4 out of 5 areas mentioned in this list are just in Ontario. And the 5 most affordable areas, Moose Jaw, Saskatchewan, $222,000. Sault Ste. Marie, $221,000. Brandon, Manitoba, $214,000. Fredericton, New Brunswick, $195,000. Cape Breton, $187,000. Question is, how long do these areas remain affordable? I've set up links in the description below to promo codes that you may find useful. These are all products and services that I use in my daily life. So go check them out. Do you have questions for me? Drop them in the comments below. And while you're at it, make sure you've hit that like and subscribe button so I know I can continue making content like this. That's it for now. I'll catch you guys in the next one.